This is your LMAX exchange technical update for Tuesday, December 6, 2016. Euro dollar. So we're looking at the euro weekly chart here, and after the market stalled just shy of that critical base from 2015 at 104.63, we've seen a bit of a bounce. Overall, however, the downtrend remains firmly intact here, and rally should be very well capped. If we do see another push, it should now be well capped in the 109 to 110 area ahead of that next downside extension eventually below that 2015 base at 104.63. Sterling dollar. So cable has seen a bounce over the past few weeks, although the market now is coming into some previous support, now turn resistance in the 128 area. Clearly, looking at this chart on the weekly, the downtrend remains firmly intact, and the market should be looking for that next lower top ahead of a resumption of declines back towards a retest and break of the 31-year low that we saw down around the 120 area. Only the establishment back above 128 would take the immediate pressure off the downside, while a break above highs around the 135 area would be required to negate the current downtrend in cable. Dollar yen. The dollar yen recovery out from those recent multi-week lows has now been very impressive, and the market is looking a little bit extended as it trades up to psychological barriers at 115. Don't rule out the possibility for the market to now stall out up here in favor of some form of a corrective decline back towards the 107 to 110 area before considering the next push higher through 115 barriers. Euro Swiss. So as you can see here, Euro Swiss has mostly been locked within a consolidation. If you look at the weekly chart, the market's been roughly trading in the 108 to 110 area, and that's kind of where we're trading right now. We did see a bit of a breakdown, which potentially opened the door for a retest of those 106.20 area yearly lows, but overall, again, the market has been mostly consolidating and waiting for that next major break. Aussie dollar. So Aussie has seen a bit of a bounce out from recent trade after the market put in a critical low back earlier in 2016. But overall here it looks like the market on a longer term basis is still confined to a downtrend and should be readying for that next major drop to retest and break below those critical lows that we saw earlier in 2016 down in the 68 area. At this point it would really take a break back above the 78 area to compromise this bearish outlook. Dollar CAD. So dollar CAD has been confined to a very intense uptrend over the past several months, and although we've seen a bit of a pullback here in recent trade, the market should be very well supported down towards the 130 area ahead of that next higher low and fresh upside extension, eventually taking us back to those early 2016 highs that we had seen all the way up well above 140 and closer to the 150 area. Kiwi dollar. So the New Zealand dollar has been seeing a very nice correction out from those 2015 lows down around the 61 to 62 area, and at this point the longer term chart still favors downside and the formation of a potential lower top, which we've seen potentially in the form of that 2016 high just shy of 75. Look for the market to continue to be very well capped for now up towards the 73 area in favor of resumption of declines. A break back below the recent lows that we saw around 69.70 will confirm or strengthen this outlook and accelerate declines, exposing next key support in the 65 area. SPX 500. So the S&P 500 is now trading up, but just off the record highs that we saw in the previous week. It's interesting to see if the market now is going to be looking exhausted for some form of a top ahead of a resumption of declines or an acceleration of declines and a shift in the structure, or if this trend is going to continue to push higher towards next key psychological barriers in the 2250 area and then 2300 further up. We're clearly in uncharted territory here at the record highs, but again, with the trend being so intense for several years now, there is risk of this market now topping up here in favor of a more intense bearish shift and correction lower. Gold. So gold has seen an intense pullback over the past several days and as over the past few weeks. But overall, if you look back to 2013, it looks like the market could still be putting in a major base and expected to find potentially some good internal support in here ahead of 1130 in the 1150 to 1170 area in favor of that next higher low, and it push higher back towards a retest of the 2016 highs, which come in around the 1375 area. Ultimately, it would take a break back below the 1130 area to compromise the basing outlook and suggest that we'll see a retest of the critical multi-year low from 2015 down just shy of 1000 in the 1045 area.